Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see overnight, the market fell into a bull trap as it took the challenge higher with this rising wedge, which is a bearish pattern, and ends posting a significant candle being a bearish outside range day. With the market plummeting from the highs just above 74 cents, we didn't quite get the trigger level, which was at 73.40. Now we're only about 20 odd points away from that level. If we do see a break of 73.40, it would see a further indication to the downside and look towards 72.65 with a target of 72.20 and reassess from there. In light of the rejection and the bearish outside range day and the rising wedge, does give further confliction of a bearish outcome, but I would like to see the MACD go through the zero axis and also the RSI through the midway point and see a marriage that would also help and give the call further strength to the bear case. But nevertheless, the pattern is there to support the bearish case. We just now wait for confirmation from a break of 73.40. The euro took the challenge to the top side, and as you can see from back in August, the challenge was there again at 120 and rejected as the US dollar, which measures the greenback strength against a basket of 6 major currencies, rebounded from the lows of 91.60 and recovered about 25 pips. Nevertheless, the rejection from 120 has given us some indication that there is heavy defense from the bearish case. Even though the candle is actually slightly bullish today, let's see if we see another rejection from that top side of the range. I would like to see these indicators start to break down, that is, and lacking due to that, may see one more attempt, which is about 40 or 50 points to the upside before turning around. It was questionable whether dollar yen was going to break lower, but you can see here it's held with this short-term support. And from the close, and also the rebound, has posted a bullish outside range day. It is assessed from that we could see further indication to the upside and look towards the highs of 104, with the cap seen around 105, where this trend line comes in from the broader picture. If I just lose that, you can see here that it's held very, very well. Looking at this pattern though, it is a little bit more convincing as the MACD is slightly gained above the zero axis, and the RSI is also relatively bullish. And because of the two being married up, we can't at this point rule out at least another 60 points and reassess from there, or anywhere around 105 figure 20. The pattern for sterling, well, we're seeing many rejections from that 133.90 figure level, at least 7 rejections, and the last one being a greystone and also breaking of the trend, but we haven't broken down. We do need to see a break of 133 figure after we have seen a couple of attempts, and keep an eye on the MACD, because if it does go through the zero axis, it does give further indication that we're looking down towards 131 as a potential target for the pound. With little progress with Brexit, could weigh further on the pound. Now, as you can see, there is a bit of a support here at 138.50, but if we see the pound go through 133 figure, that would give further weakness for sterling yen. Not quite broken down by the technicals, but still seeing a cap around 140 figure 30. The gold took a challenge to the downside, but it hit a rock solid base at 1,765, which is where I'm calling them the support. Do be on your guard, because the technicals for the RSI, that is, has picked up a little bit, and the ADX is overheating to this bear trend. Nevertheless, there's a lot of work to do on the top side to get this market turned around, and we would need to clear at least the last few days of challenges around that 1,820 level. I feel there's a lot of risk still to the downside due to the fact that the primary trend is still holding somewhat negative from a weekly basis, but keep an eye on this. We could see by Saturday on the close of New York that could be a dragonfly. If so, could see a short-term recovery. Nevertheless, I'm a little bit cautious of my bearish call because of the rejection of 1,765. So do continue to lower your stop losses and take profits according to your risk management, just in case we do see a short-term squeeze. Wrapping up with oil, well, the market's still focusing on this trend line. It is formed somewhat a base around 44.15, 45. That we see a clear break and a close under, say, $44, make it cleaner. Then we could see a further slide down towards the region of $41. Keep an eye on these indicators. They are breaking down, and there is some evidence that oil may be showing a small correction to the bear case. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.